Good morning, everyone. I hope everyone is doing well today. Hello, Thomas said good morning. William said good morning, Theo, and everyone on board. Good morning, William. Larry, good morning, Theo. Good morning, Larry. Mladen, good morning, Mladen. Ruben, hello, Ruben. Good morning, Theo. Good morning, Ruben. Mogiol, good morning, Mr. Theo, and to everyone else. How are you doing, Mogiol? Should I assume the first like of the day comes from your behalf? Cherry said, good morning, everyone. Hello, Cherry. Mr. Carlos, good morning. Nick, $78. Good morning, everyone. Good morning, Nick. Maria, Julia. Morning, happy people. Good morning, Maria. Zarabayat, how are you doing? Good morning. Rumen said, hi, everybody. Good morning, Rumen. So, did you guys participate on the trading psychology webinar yesterday? Did you made it? I hope you left some feedback, because lately I don't see many feedbacks on Zoom, and I appreciate if you leave also some feedbacks of things maybe you want to see more, or some recommendations from your behalf. Joel said, good morning. Good morning, Joel. So let's dive into today's webinar. This content is for general information only. It is not intended to provide trading or investment advice or any personal recommendation. Remember to check your weekly fundamental analysis on the podcast, on weekly podcast area on our website. And of course, if you haven't downloaded the mobile application, please make sure you do that. So just one moment, guys, to bring up the trading platform, and we are ready. Okay, so here we are. So let's start with the pound US dollar. X-Man said hello to all. Larry asked, is there a recording of yesterday's webinar? Yes, it will be a recording, of course. Just keep an eye on the YouTube channel, and the team will edit it and upload it on the YouTube channel. Mogiel said no. I had a second like it's yours. Raquel, join us. Good morning, Raquel. So let's start with the pound against the US dollar. What do we have here? We have that yesterday the pound didn't really make it to create a new high here, and we had that false breakout. Now, I'm still bullish, to be honest, in this market, because we just see higher highs. We don't have any reference of lower high yet. If we will have, then I will definitely be looking to sell it. But for now, I'm still bullish. I like to buy from support. So here it's in the middle of the move. I'm not interested to buy it here for swing trading, obviously. Again, guys, if someone trades on the 5 minutes or 15-minute charts, he or she doesn't see this as the middle of the move, because on the 5-minute chart, a new, for example, higher high, it's going to be an ideal way to buy for that intraday trading. But for swing trading, to buy here and have a stop loss below there, maybe there is too much room for error to happen because the price may decide to move backwards. So where is ideally area to buy when the price touches the support? It's like let's say the helicopter when they carry water, they have the bucket is empty, they go over the sea, over the river, they take the water. Once the tank is full, that's where the momentum it has to start. Okay, so that's where you go with the flow. But if you try to predict in the middle of the way, then at some point there is too much room for error. Okay, so remember this this example. You need to buy at support where the massive orders, the much of the flow is about to join, and it's going to give you high probability to experience good trades. Euro US dollar. Yesterday, the pending, the alert, sorry, for the pending order didn't trigger, so I canceled the alert. Yesterday, we had this inside candle. Neither the buyers or the sellers, they took control over the price. For this short-term trend line, from my analysis, I see a more sale. If you guys see buying opportunity, here it's a good bullish engulfing potential. Right now, the market already made a lower low. So if this is a false breakout, when it's going to push higher, it's going to come with such a momentum that the price most likely it's going to explode. Okay, so in this occasion, if I would like to buy, I would have placed a buy stop order above here. Next, Australian dollar, US dollar. Yesterday, interest rates in Australia didn't rose by the RBA. Australian dollar really didn't make any directional move. We can see this, I think that was the yesterday's one on the hourly chart. So we just saw a spike downwards and then a couple of sessions later, recover of the move. I'm still bearish, but not like this. I need a price action to confirm. So what I can do, I will place an alert above the previous candle high. And I will be waiting. If this alert triggers, I'm going to come and place a sell stop order below the white candle open. Some questions here. Athena, good morning, everyone. Good morning, Athena. Zarabayan asked, which time frame did you analyze the euro US dollar, Theo, please? Yes, that was on the daily chart. Nick asked, but we need confirmation, and then confirmation comes, be the candlestick or anything else. You already are somehow in the middle of the move. Sorry, Nick, for which currency pair are you referring to? On the Australian dollar? If it's on the Australian dollar, the good thing with this is that we really have some buyers up here, and if the buyers, they're gonna make a false breakout, then the sellers most likely they're gonna come with much of momentum, because that called retracement, and we enter on the retracement. That's why we can experience high volatility to push the price lower. Okay, you are referring to the pound US dollar. Yes, exactly. In the pound US dollar, I totally agree. We need the candlestick the candlestick confirmation if we're gonna do swing trading from this area of support. But if you are an intraday trader, again, you cannot wait for the price to reach the daily chart support and to start looking for opportunities, because intraday trading, you're just trying to get in with 5-10 pips in the market and just get out of the positions, right? Next, Kiwi US dollar broke the downward trend line to the upside. I don't have any bias anymore. So the market structure, from what I could understand, it's not there for the short side. What can we maybe expect is if the market makes a higher high, then we can look for some retracement to participate in the move. But now market structure broke. I don't have any bias. USD JPY, that start looking good for my reversal trading. The market made this higher high. So it's an ideal for me to place a sell stop order below the previous candle close. And what I like here is that so far we have 30 pips range of move with an ATR of 3 times more. That means if we're going to have a stop loss above here, if it's going to be a stop loss above the previous candle high, and the market can break below the previous candle close and move the ATR distance, we're going to have within the day 3-to-1 reward to risk. Radu said, good morning, Theo. Good morning, Radu, and welcome to the webinars. USD Canadian dollar. The alert got triggered yesterday on the downside, and I placed the buy stop order, but it didn't trigger because the market closed here. My buy stop order was there where I'm pointing. Today, I'm still looking for the bullish engulfing. I will be waiting, to be honest, with my alert at this point here. If the alert triggers, I'm going to come to place again a buy stop order for the engulfing. Euro US dollar, Euro JPY, it doesn't show anything here. Pound yen, it looks nice for this reversal trading, but haven't broken to the upside yet, so I'm still waiting. Australian dollar JPY, nothing that interests me today. Why? Because we broke above this area, but the market is it didn't break with a bullish engulfing, so I'm not interested. CAD JPY, market made a higher high already, and this morning I placed a pending sell stop order. Again, guys, I will explain you what's the power with bullish and bearish engulfing. So let's say the market, just allow me to flip to the bar chart and show you the engulfings on the bar chart. It's easier to visualize them. Okay, please don't get confused with the bars if you haven't seen bar charts before. What's the good with the bar charts? They show the open and the close very clear. So the bar chart consists with the high and the low, and on the left is the open, and on the right is the close. Now, if the open is lower than the close, if the close is higher, it means it opened low, it closes high, like this one here, and that's making it a bullish candle, like this one here. Left open, right close. If it opens, again, left open, right close. If the close is lower than the open, it means it's a bearish candle. Now, how can we see the bullish engulfing, to spot the bullish engulfing much easier? You see these candles here, these two. Market open here and closes there. The next day, the market opens here. It took the previous day's low, it make lower low, and it closes higher. But why it's so strong? Because if it's going to make a new lower low, it means that there is selling activity coming in force in the market. Because imagine all these traders the previous day, they were in this bias. Today they decided that they want to sell, and they start selling below the previous day's low, and that's a very strong selling sentiment. So if I believe that the market it's in an uptrend and I'm looking to buy it, once I see that the market make a new low, I come and I place a buy stop order above the preview candle's body, not high, because the chances if it is going to surpass the previous candle's buy, it's going to continue and beyond the previous candle high. So with this way, I allow myself to trade on the daily chart, but with small range of between the entry and the stop loss. And that make it more favorable because the ATR shows the range of the day. And most likely, if we take this approach, it will give us more room for the price to move anyway within the day or within the next couple of days. That's the reason. Guys, I hope this makes sense. If you still have questions about bullish engulfing, please mark the time of this webinar on the 15-16 minutes of this of the today's webinar and refer back to it later. Same apply with bearish engulfing, but when we want to sell. Next, New Zealand JPY. So market made a higher high, clearly today's close higher than the previous high. Therefore, I'm not going to be looking to sell this market. I will be only interested now to buy the market. Someone yesterday, and sorry, I don't remember who, asked me about the trend lines, if we can cut them through or how to draw them. Or maybe it was an email. Sorry, I don't remember exactly. But if you try to cut through the trend lines just to fit the price, to cut through the price just to fit the next price swing, that's not how we draw the trend lines. The trend lines, if we use these two swings as the reference, we start from the first one and we hold the trend line from down upwards and moving up. Once we find the first low, we stop. That's it. We included the price range, and that's all what it is. If you, as reference, you want to use this swing here and this swing or that swing, you start your trend line from here, you take the other side of the trend line, and you start moving to touch the swing you want to touch. If you want to touch this swing, or if you want to touch that swing, you start and move the trend lines. Once you find the first obstacle, the price obstacle, you just stop. And then you have your trend line. Now, if the trend line doesn't fit with any other price data, it's okay. That's what the market did. And I can't explain it in more simple way. Okay, we don't draw the trend lines to force them to fit the market. We draw the trend lines to identify if there is a trend that can be captured with this diagonal line. If it cannot be captured, we use moving averages, because moving averages are dynamic trend lines. They are every single period, they have different calculation, therefore they move in a dynamic way. Nick has a question: when you have time, can you tell us more about the use of ATR? Yes, I will do that, Nick, no problem. Mogiol, it was you asking about trend lines yesterday. I'm learning a lot. Happy to hear that. Let's check the DAX at this point. Very quickly, EuroCAD, nothing. If the EuroCAD, guys, in this near-term trend, we see that it's kind of bouncing through this support. If the price is going to come and touches this support and reject it, we're going to be looking to buy it. At resistance, we're going to be looking to sell it, the same. But if it comes at resistance and breaks through aggressively, we're not going to be looking to sell it, obviously. And that's the reason I don't really like to put sell stop and buy stop and sell stop orders blindly at support and resistance. I prefer the price action confirmation before doing that. Let's check the DAX. It's been 3 days. DAX it's selling off. We are approaching at the yesterday's low, and it's a strong support because the previous the previous candle as well has this as support. So here is the one. Five-minute chart. Ideally, we want to see retracements in the next 5 minutes to place sell stop order. Really, the DAX the last few days, it wasn't something that, it was very choppy, very extremely choppy. When you check your higher time frames, you guys realize, especially those who constantly on a daily basis watch these webinars, you will see that we had very nice trading activity once we were coming from this resistance. Every day winning trades non-stop. After we came at this point here, we didn't know if the market is going, not only we didn't know, also the market didn't know if it's going to break below. You see this doji candle. This doji candle at resistance indicates that market most likely it's going to push lower. Now, when we draw this, that was a relevant resistance. Okay, now we don't have it as the resistance of this candle. It happened to match as support of the current price move, so don't get confused. And when we were looking this market here, you see there is support here, there is resistance here. And I told you, when we bounce from support, It's very predictable and easy to trade. It's simple to trade because the buyers are bullish. When we move a little bit beyond the support and we come close to the middle of the range, that's where things they get south. We don't know the direction. It's very, very hard to have clarity. So from this rejection on the 5 minutes, I can see that the 1 minute it's in some kind of retracement. Let's hope for the next couple of minutes, we're going to see more buyers coming to place sell stop order below. Let's see what's going to happen. Ruben asks, I don't like to operate in the support 3 zone. What do you think? If you are referring to pivot points, I usually trade only from the main pivot to S1 or R1. I don't even look at S2 or S3. Yep. Yep. Okay. Couple of minutes before the London Open, and the market is not pushing higher. The DAX is almost in S3. Okay. So we have 1 minute left. So I go with a sell stop. Very cautious, guys. I'm very cautious with this trade. It's not an easy setup, this one. Okay. But I'm willing to take the trade again. Shara, thanks for joining us. Good morning, Theo. Good morning to you. So let's see if we're going to get triggered to the downside. Again, if you're taking this trade, guys, be a bit cautious. We are approaching a support zone. I haven't been triggered yet. Market is pushing higher. Let's see if it's going to sustain the push. So as Ruben said, DAX is almost in S3. We can see some bounce from that level. Okay, minimal move on the DAX. Let's check the pound. I'm very curious to see how the pound moved. Pound cut, nothing honestly here. Pound Kiwi, it's moving lower. If you see the weekly chart, we had this dodgy indecision, let's say somewhere at resistance, but no bearish engulfing to help us get and go with the flow. I don't have any buy stop on the DAX. That's 50. That's 20. Ideally, if you are bullish on the DAX, a breakout trade can be from this high here, from 9:30 a.m. highs. Very nice bearish engulfing. If this bearish engulfing, it's going to sustain and it's going to follow through, we most likely going to get filled in the trade in the next few minutes. X-Man asked, Theo, when do you think you will be able to do a webinar about Bollinger Bands? I will may ask Paul that he hosts some price action series if you like guys to do that for you. Because I don't know really when I will be able to do it. I need to plan it and schedule. So I'll definitely let you know. So let's see if the move is going to sustain and we're going to see some continuation. Ideally, what we would like to see the next two candles to be bearish or black color candles, because that's the 1 minute chart. And it means if by the time the 5 minute candle will close, if we see the next few candles to be black, most likely we're going to have some more bearish continuation in the market. So we got fuel for sale today. We have a few more minutes before my colleague will start his webinar and maybe we're going to get kicked out. 5 minute chart. For those who trade gold, so don't pay attention to this order, guys, on the gold. It's all pending orders, and I was doing some testing on the mobile application yesterday. Gold, it's a bit, this trend line, it's not valid anymore, to be honest. Maybe we can draw a new trend line. So from this point, yeah, it made a lower low here, and from this point, it made a lower low there. So this trend line is also valid. We have this high that it's very obvious here and can be used as resistance. Looks like it's bearish bias. If we're gonna have a higher high here, I'll place a sell stop order below the previous candle body to get fill with potential bearish engulfing. WTI, it's just moving sideways, nothing here. Dow Jones, that's a nice setup here. We are at resistance with small candles and sellers, they appear. So maybe we want to keep an eye on Dow Jones for some short positions. Let's see the DAX. Okay, guys, keep an eye on that one. I'm willing to get out of the position if the price closes beyond this high point here. Okay, so I have to wrap up for now. In the meantime, I would like to wish to everyone to have a fantastic day ahead. Happy trading, guys, and I look forward to see you tomorrow at the same time. Thank you so much.